Hiya and welcome to this video where I aim to cover the recording of transactions using T accounts. Understanding how to record transactions in T accounts will then lead us nicely to one of the first steps in summarizing transactions, and that is to balance off the accounts. We'll then end this video with a brief introduction to the trial balance. So far, what we've thought about is recording transactions by the application of the dual concept, and we came across the mnemonic dead click to help us apply the dual concept. We've been using the example of KA and her tuition business, and we went through 3 sets of double entries that her business encounters. To derive double entries, it's helpful to consider movements in the elements in terms of increases and decreases, and then translating these to accounting language using debits and credits. For instance, if KA invests £1,000 in her tuition business, this would be seen as an increase to assets, namely cash, and an equal increase to capital. To help us turn this into accounting language, we're going to use dead click. So remember, we debit for increases in expenses, assets and drawings. Likewise, if we want to increase liabilities, income and capital, we would credit. Okay, so we credit for increases in liabilities, income and capital. Remember, for any transaction, the total debits and credits, they must total. Here, the dual impact for investing £1,000 in her tuition business is to debit cash and credit capital for the £1,000 invested. I'm not going to go through the other 2 transactions, mainly because we've seen this already in another video. However, can you think of the problem of recording every transaction as simply a debit and credit in a narrative list form? Well, the dilemma really is that for many businesses, they will have hundreds and hundreds of transactions taking place daily. You can imagine the struggle if they're writing out debits and credits for every single transaction. Not only would this be tedious, but it would also be time-consuming. And more importantly, it would be a nightmare to summarize. How would you ever know the total of your cash by year end if all you were doing was listing out debits and credits for every transaction? Well, there is a solution to this. We use what is called T accounts. Now, the name T account is derived from the fact that this account is in the shape of a T. A typical T account looks something like this. The left-hand side will always be for debits, and the right-hand side will always be for posting your credits. What we see on each side of the T is columns where we would typically have information about the date, a narrative, and the amount. As you start to practice drafting more T accounts, this layout will become more intuitive. I think it will really help with your understanding if we can actually see transactions being posted firsthand into these T accounts. So let's do precisely that for KA and her business. Now, before we do this, just a few points that we want to be mindful of. For every item, we want to make sure that it has its own T account. So yes, we've learned that there are 5 key elements: assets, liabilities, income, capital, and expenses. However, for the purpose of recording the transactions, we tend to break these down further into different types of assets and the different types of liabilities. So we would have a separate T account for buildings, for motor vehicles, for equipment, for cash, for receivables, for payables, so on and so forth. Collectively, all the T accounts are often referred to as the nominal ledger. Okay, so the nominal ledger, sometimes called also the general ledger, is simply the phrasing that is given to all T accounts. Okay, so this is the collection of all the T accounts. Okay, now as a result of this, sometimes T accounts are called ledger accounts, and the names are often used interchangeably. Nowadays, you don't actually have manual ledgers with individuals that draw out T accounts to populate transactions. They're obviously done via accounting systems, but it's really important for your understanding that you know how the postings in these T accounts actually work. So let's move on to do precisely that for KA and her business. Here on this page, I've pre-drafted the various T accounts that need to be posted for KA's business. We've seen that in transaction 1, KA was investing £1,000 in her tuition business, and we said that the double entry for this transaction is to debit cash and to credit capital. Remember, the left-hand side will always and always be for your debits, and the right-hand side will always and always be for your credits. So let's post the very first transaction into the two accounts that are impacted, cash and capital. We said debit cash, and instead of a date, because I've not provided that, we're going to use a reference, and I'm simply going to reference transaction 1. The narrative that we use in the T accounts will often be the corresponding ledger to which that transaction has been posted. This helps provide a clear audit trail of the transaction. In other words, a manager looking at this T account will be able to identify that the other side of this entry has been made to capital. So as you can see, my narrative there is to the corresponding ledger to which this transaction belongs. And I'm going to enter the transaction there of £1,000. Now let's not forget that we do need to post the credit side of this transaction. So we've posted the debit, okay, to cash. The corresponding credit will now be to capital. Again, I'm going to reference this as transaction 1 because I've not provided a date. My corresponding narrative will be cash. Okay, that's where the other side of the entry has been posted. And again, the amount there, 1,000. Right, so we've posted transaction 1. We can move on to transaction 2. Now, if we take a glimpse back to what transaction 2 was, transaction 2 was the purchase of a laptop for £400. Now, we said that the dual impact taking place here was an increase to an asset item, PPE, in particular it's computer equipment, and there's a decrease to cash. So the dual impact is we debit PPE, we credit cash. Let's take that and post it into the respective T accounts. So we've said there's an increase to an asset, namely PPE. And when we're posting T accounts, we do like to be very specific with the account that's affected. So I've labelled up here a computer equipment ledger. We want to increase this by 400. Remember, it's an asset. Increasing assets, we're using a debit. So on the debit side of this ledger, we're going to post this transaction. I'm going to label this as transaction 2. The narrative that I use will be the corresponding ledger to which I've posted that entry, and that's going to be to cash. And the amount that's spent on the purchase of the laptop, that is the £400. Don't forget to post the other side, okay? So we're reducing cash. I'm going to label up here on the credit side, transaction 2, my narrative, computer equipment. Okay, and I'm just abbreviating equipment there, and we're going to note the amount there of 400. Right, so that brings us on to the final transaction. The final transaction was to do with some income being generated by the business in the form of a student paying for some tuition services. We said that that would be an increase to cash and asset and equally an increase to income. So we are debiting cash 55 and crediting income 55. So let's take that double entry and just like with the previous 2 transactions, post this into the T accounts. Okay, so here I have drafted an income T account, and as always, you've got your debits on the left and you've got your credits on the right. So we know that money is coming into the business, so let's get the debit in first, and I'm going to reference up transaction 3 there as income, okay, or sale, and that's for the £55. We've posted a debit. Don't forget the other side of the transaction, the credit, okay, to income. So I'm going to label up here transaction 3, my narrative, the corresponding ledger to which this transaction belongs, cash, and the amount there, 55. Now that we've posted all the transactions, what do you think might be the next step in this accounting process? Precisely. In video 1, we said that accounting is all about recording and summarizing transactions. So far, we've focused on recording. So I hear you say that the next step is all to do with summarizing, and you're absolutely right. You can imagine that if a business had hundreds of transactions, these ledger accounts could get very, very busy. What a manager may be interested in is the overall balance or total in a particular ledger, such as how much cash do we have left, how many sales have we made in the period. It is possible to derive these totals via a process known as balancing the ledgers. And this is the next thing that we'll learn. So over onto the next page, what I've done is simply extracted the cash T account that we've just produced for Kay and her business. Obviously, this account is not as busy as you might expect from businesses in practice because we've only populated 3 transactions. Without me even going through the process of balancing accounts, would you be able to tell me what the total cash balance is at the end of the period once we've posted only these 3 transactions? Hopefully you've calculated this in your calculator as 9,655. How did we get to that amount? Well, if you think about what has been generated by the business as inflow, we've got the 10,000 and the 55. And we know that as an outflow, the business has spent £400 on buying a laptop. So if we summate the inflows, the 10,000 and the 55, and we deduct from that the outflow, the 400, you do get 9,655. Now that's a relatively straightforward way of deriving the overall cash balance. However, in practice, there could be hundreds of transactions on either side of this T account, so it might not be as easy as what we've just done here. So what we need is a process. There is a 4-step process we can use to derive this very total. I'm going to talk through this process, and it should be fairly easy to follow. It will give us exactly the total that we've just calculated, the 9,655. Step 1 in this process is to assess both the debits and the credits, and to look at the side that gives us the highest total. Now it's pretty evident here that the debits are higher than the credits. So, in step 1, I'm assessing the higher of the 2 sides. In step 2, I'm going to force the higher total to be the total on both sides of my ledger. So that 10,055, which is the total for just the debits, I'm going to force it to be the total of my credits as well. Now, clearly you can see that the credit side doesn't equal 10,055. So in step 3, what we do is we take a balancing entry and we call it the balance carried forward, which I'll abbreviate as CF, and we insert the balancing total in order to force the credits to equate to 10,055. The balancing amount there, and that beta sign representing a balancing entry, is 9,655. Now, accounting is all about double entry. We cannot just post an entry on the credit side without posting a debit. Therefore, the final step of this balancing off process is to post a corresponding entry on the opposite side of the ledger, which in our case is on the debit, for a balance brought forward, which I'll abbreviate as BF, for the same total. We always post this balance brought forward after the total, okay? And that is to signify the balancing off process. In other words, we're closing off this account to start with a new opening balance which we can roll forward into the next period. It tells the manager of this business that they have an overall cash balance still available of 9,655. So, 4 steps to this balancing off process. We look at the totals on both sides and take the higher, force it to be the total on both sides. The side that doesn't equal that higher total, we're going to slot in a balance carried forward, and we make that the balance brought forward on the opposite side of the ledger as our final step. Okay. As you practice more of this balancing off, it should hopefully become second nature. It's a crucial step to balance off these ledgers in summarizing our transactions, and it's one of the first things that businesses will be doing in the steps towards producing year-end financial statements. Once we've balanced off the accounts, the next step brings us closer to producing the accounts, and that is the production of the trial balance. The trial balance is simply a document that summarizes all the accounts within the nominal ledger, and this will be based on their brought forward balances once the accounts have been totaled. Here on this page, I've drafted a very basic trial balance. As you can see, all the accounts that are typically found in the nominal ledger have been listed down the left. They have been listed with their corresponding balances brought forward categorized as either a debit or a credit. A little helpful tip to note, remember the mnemonic dead click? Well, dead click can be really helpful here. It's generally the case that expenses, assets and drawings will have a debit balance in the trial balance, or a debit balance brought forward that we feed into the trial balance. Equally, liabilities, income and capital will typically have a credit balance brought forward that is fed into the trial balance. So thinking about what I've said, we can see here that assets, okay, so PPE, cash, receivables, expenses and drawings, they do have a debit balance. And generally speaking, we've said that liabilities, capital and income, okay, typically have a credit balance, and we can also see that here. The name trial balance implies that total debits and credits must equal, and we can see that that is the case here. This trial balance essentially acts as a control mechanism ensuring the application of the dual concept. If you've posted all entries correctly, total debits and credits will equal to the same amount. If not, there's clearly an error and it needs to be corrected. That's all for this video on T accounts. So we set out to consider how to record transactions using T accounts, which we've done, bearing in mind that debits will always be posted on the left and the credits will always be on the right of the T account. We've learnt the important steps involved in balancing off ledgers, which essentially helps to summarize the totals of transactions within accounts, and we've just ended with a brief little look at the trial balance, which simply summarizes all the accounts in the nominal ledger. Hopefully you found this video useful, and I look forward to having you listen in to another video.